SWIFT sounds harmless. It's just a computer system that helps banks send messages to each other. Your payment is on the way, that sort of thing. It doesn't hold money, it doesn't move money, it just sends the instruction. But when you follow the historical archives, you start to see that SWIFT is not really as neutral as we've all been told. It is the nervous system of global finance. And it was built very deliberately by the same Western banks, the same central banks that built the post-war economic order. If you ask the banks, SWIFT was set up in 1973 when 239 different banks came together from 15 countries to join a cooperative in Belgium. But 1973 is a dishonest place to start this story. The machinery was built decades before. We need to start in 1930, actually, with the establishment of the International Bank of Settlements. On paper, the BIS is neutral, but in reality, it is a private club for Western central bankers. During the war, it handled Nazi gold and kept trading between enemies. That tells you what neutral really means in finance. It means continuity of economic control, no matter who's in power. In 1944, the dollar becomes the world's reserve currency and the IMF and the World Bank are born. From then on, access to dollars and credit depends on rules written by Washington and Basel. In 1955, the euro-dollar market emerges in London. This is the point when money starts to move digitally through ledgers and messages, no longer loaded onto ships or bars of gold. Then in 1971, Nixon decouples the dollar from gold. In plain terms, what this all means is that since 1971, money in our economy has been completely informational. It is not backed by any real-world commodity. It is created every time someone takes out a loan. Basically, this means that money that we spend today, we are basically saying, my grandchildren are going to pay that bill. We are literally paying our existence forward now to future generations who will live in debt to these central bankers. So 1973, Citibank create the first messaging system of this kind. It is called the Marty system and it is a cartel. They try to force adoption onto corresponding banks worldwide, but European banks resist what they refer to as an American monopoly. So 239 banks come together in an attempt to prevent this US monopoly and they create SWIFT, replicating the exact same power structure. It is also a monopoly. And because so many of the big banks commit to SWIFT, any competitors cannot gain traction. This is called the network effect. So by 2022, SWIFT has 11,000 institutions. SWIFT was presented as a cooperative, but really it's an information cartel because only member banks can use it. Each one got a code. No code, no access. And because Brussels sat between Washington and Basel, it looked neutral. But it's run by the same G10 central banks and Western lenders. The transition to SWIFT happens at a key moment in imperial history, because it's when financial power replaces standing armies. We move into data infrastructure, techno-feudalism. From 1977, the SWIFT network grows so quickly because at the same time, the IMF and the World Bank are rolling out these structural adjustment programs. So countries from the global south get told, open your markets, liberalize your resources, privatize your banks, and join SWIFT. By the 1980s, every major bank needs SWIFT to send or receive any money. And the IMF literally required financing assurances from private banks before it would release loans. That gave these same Western banks veto power over whole economies. When you strip away the financial jargon, you are left with 3 layers of control. Standards means formats that everybody must use. SWIFT defines those formats. If you don't speak the format, you cannot join the network. The second thing is access lists. They're called RMA permissions. The banks must authorize each other to allow these systems to talk. One delete and your message isn't going through. The third thing is these correspondent accounts. It's where the actual money sits, inside accounts at big banks based in London and New York. If those accounts are frozen, your currency stops moving. Those are choke points. They are what make it possible to sanction an entire nation simply by flicking a switch. After 9/11, the US government secretly pulled SWIFT data for its terrorist financing program. The EU protested and a compromise followed, but a basic precedent was set. Western intelligence can see the payment flows across the world. And from 2012 onwards, we've seen outright exclusions from the network justified as sanctions, which shows you exactly how political this system really is. You don't need to invade a country if you can simply cut it off from global trade at the flick of a switch. That is why globalization still runs on the same arteries, the same trade routes that the empire built. They never ripped out the plumbing, they just replaced the gunboat with a more powerful weapon. On a technical level, SWIFT could have many competitors. In theory, multiple financial telecommunication trading technologies could be taught to speak to each other. We could still have banking standards and trading standards and interoperability without allowing the Pentagon to be able to see everything. What's interesting here isn't the villainy, but the continuity. Every step from holding Nazi gold at the BIS to the fiat dollar domination to the SWIFT exclusions, all of this is documented openly as government policy. It shows us how power in finance never really disappeared. It just rebranded itself into compliance and standardization. SWIFT is a surveillance network rooted in the same power that drew the original colonial maps.